I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Adam Hamilton. He's the CEO of ZealLLC.com. He's speaking to us from Colorado. Adam, the stock markets this summer kind of interesting in that one of the indexes, or indices, as some people might say, is up, and then the other two are down, or the Russell 2000 for some reason will make a minor breakout. What do you read from all these different markets peaking and then dropping at different times?
Hey, Jim, great to see you. It's been just crazy this summer. It's one of the weirdest summers I've ever seen. July especially, this past month, has just been absolutely just insane. You know, like, there's probabilities, markets have historical cycles, you can study market history and see how things work, and the way the markets are working now is just so far beyond precedent that no one can understand it. Someone from a major bank, might have been Goldman Sachs, JP Morgan, did a study, in a deep statistical study, and they found out that it's like a 1 in 10,000 year anomaly. I don't know how they could determine that, but apparently the probability of what's happened in the markets for the past month happening is so low, you should only see it once every 10,000 years if that was possible. So we've had a really super tight trading range. After that successful Brexit vote in late June, that kind of shocked the markets. They sold off sharply for a couple of days, but then they started rallying just dramatically out of that into quarter end at the end of June. Fund managers were positioned wrong, and they want to do some window dressing where they sell the losing positions, buy the quarter's winners, so their investors think they're smarter when they report to their investors. Then there was some early quarter buying in July, and that pushed the American S&P 500 benchmark to new all-time record highs. It had been something like 14 months since the last records in May 2015, and there have been like 7 or 8 of them so far in July. And as soon as those first new record highs got hit, the volatility just fell off a cliff. There's various volatility measures like the famous VIX Fear Index, implied volatility, the S&P 500 options a month out, and that just collapsed. And so the markets have been in just an extremely tight trading range. Like, we've seen just days and days on end this past month where the S&P 500 is up 0.1% of 1%, down 0.2% of 1%. Like, it's just one of the tightest trading ranges anyone's ever seen, especially to be at record highs. And so I think the reason the indexes are diverging is it was also earnings season when companies report their quarterly earnings. And as companies reported, if they had a heavy weighting in the NASDAQ might rise, or the S&P 500 fell a little bit, or vice versa. And so we had a lot of kind of deviations based on individual corporate earnings in a super just unvolatile market, the least volatile market in memory. And so I think if the markets were normal, I know if the markets were normal that you wouldn't see the index divergences. If we had normal moves, a 0.5% or so rather than these ultra tiny 0.1% moves, the indexes wouldn't diverge. But when you have markets that are essentially flat, I don't think it's a big deal. I've often considered anything under 1% unchanged just for my own view of the market. So, when you have 0.1%, 0.2% moves, it's just irrelevant. So the indexes can diverge with that kind of ultra low volatility environment.
How do you handle it when you see such an unusual pattern? Do you have to put on a new thinking cap?
It's really hard. I'm a speculator. I've been speculating my entire life now. I started trading when I was 12. I'm 42 now. So 30 years of trading stocks. And I follow a lot of hedge fund managers who are billionaires. I'm certainly not a billionaire. But these guys are just so confounded. They have staffs of hundreds or even 1,000 plus running these hedge funds worth 20, 30 billion. And these guys who just have all the resources in the world to watch the markets, they can understand what's happening. All my historical research is just not being borne out right now, which is really frustrating. The markets are just manipulated, for lack of a better word. All traders care about is central bank actions, whether it's the Federal Reserve or the Bank of Japan or the Bank of England or the European Central Bank. That's all they care about is more easing. Like, the markets are levitated on this drug of endless, cheap central bank money. And so all traders are watching is signals from central banks. What are central banks doing? What are they saying? What are the officials saying? And so, like, normal market analysis is really hard right now. The stock markets are super overvalued. They're trading near 28 times earnings in the United States, and that's That's bubble territory historically. I think the latest S&P 500, the simple average trailing 12-month PE of all 500 components was 27.1 at the end of July. And so we're right at bubble territory here. So all normal indicators are screaming sell. On the stock markets, I got a bunch of put options out. The older ones have just been hammered in recent months because of these new record highs. But, that's a logical bet that the markets need to sell off, that the markets are still cyclical, that they can't rise forever. And that applies to the TSX as well, since that follows the S&P 500 to a large extent. But yeah, the stock markets are really difficult to trade right now because they're so fake and artificial, and central banks have manipulated psychology to such a degree that that's all that matters is what they're doing. Nothing else. No one cares about anything else right now. Well, that'll certainly change, and I can't wait till it does.
The finance ministers from the G20 said they will do anything possible in their toolbox to maintain these markets. Well, just how much money are they willing to spend, and can they afford to spend it?
It's really interesting. The Bank of Japan had a decision last week, and it was the first decision after the ruling party in Japan won a big election back on July 10th or so. They won half of the upper house of parliament. That was way more than expected. And with their coalition parties in parliament, they had whatever the supermajority is in Japan. And so a lot of traders expected the Bank of Japan to take the next step. It's had the most extreme easing in the world. It's kind of been leading the pack for just central bank craziness. It was the first central bank to do just crazy, huge quantitative easing, printing money out of thin air to buy bonds. It was the first bank to print money out of thin air to monetize stocks through buying exchange-traded funds in Japan. It was the first major bank to push rates deep into negative territory. The European Central Bank did it first, but the Bank of Japan got all the press because they went deeper into NERP. And now traders think it's going to be the first central bank to do helicopter money, which is kind of a play off something Ben Bernanke said, a quote from, I think, Milton Friedman, where, you can just fly a helicopter over a country and just drop currency if you want to spur inflation. So helicopter money is creating money out of thin air, brand new money to central bank, and giving it to citizens directly, wiring it to our bank accounts, sending us checks, whatever, in the hopes that we would spend it and that would boost inflation. And that's just ruinous. That's going to spawn hyperinflation. So I think central banks are running out of bonds to monetize around the world. The Bank of Japan didn't do much last week, so there are rumors that it just can't find enough new bonds to buy since it owns the entire, Japanese government bond market pretty much. The Fed's run into that problem in the United States. The European Central Bank can't find enough bonds to buy that. It has requirements of what it can buy, and so it's gone into corporate bonds because there's not enough sovereign bonds that meet its requirements for yields and for various maturities. And helicopter money is really all that's left. Print money and give it directly to the people, but that's going to spawn hyperinflation. Your listeners being more familiar with Canada than I am, they'll probably know some great stories about Canadian oil towns where, you had a little oil boom in a small town and all of a sudden prices go crazy. A jar of peanut butter goes from $3 to $30 just because everybody has so much money to spend. And that's what would happen in a national economy if they actually do helicopter money. So central banks are really at the end of what they can do. They can print money and give it to people, but it's going to end in disastrous hyperinflation, which is just terrifying. And the only thing doing in that environment is real assets. Gold, real estate, things that can't be printed into existence like government because there'll be lots more money chasing relatively fewer physical goods.
Well, in Canada, the federal government's solution is to run up a deficit of $30 billion a year. I worked it out. That's $833 per Canadian. And I said, well, instead of giving it to a bank, why don't they give that to each individual Canadian? But apparently we would just use it to pay down debt, and it wouldn't really stimulate the economy at all.
Yeah, it's crazy how the government people think. They think debt's bad because they believe that more debt will finance consumption, which will keep the economy moving, but eventually that whole debt train just collapses. I think most people instinctively know debt is bad from an individual level, and it's bad, therefore it has to be bad at a corporate level and bad at a government level. Eventually there's a reckoning. Either you have to pay back your debt, or if you're a government, inflate your way out of it. The problem with inflation, printing money, creating money out of thin air, is it hurts the people most vulnerable in society. The people on fixed incomes, whether they're pensioners, whether they're, stuck in lower wage type jobs, they're just decimated when inflation raises prices. I read an article this morning talking about the real rate of inflation in the U.S. being at least 7%. The government claims about 2%. And, running a family and a household, I certainly think the inflation is a lot higher than 2% here in the States, and I'm sure it is in Canada as well. And inflation is such a bad thing, and that's the only way out of these massive debt loads that the U.S. has certainly taken on, and to a lesser extent Canada recently.
Well, I was going to say the official inflation rate, yes, 2%, but both Canada and the U.S. exclude energy and housing prices. Now take Vancouver, where the price of a detached home has gone up 30% in 1 year. I don't see wages going up that high.
Oh, totally. Yeah, the inflation gauges in the U.S. are really, really bad as well. It's skewed. They use these things called hedonic deflators. Like, they try to look at the quality of life. Like, if you buy an iPad today, it's the same price as an iPad, 5 years ago, but it's faster. So therefore, they want to say the price is cheaper. If it's twice as fast, even though you're paying the same price, it's effectively half the price. And excluding the stuff you actually need to live on, like food and shelter and energy, is just ridiculous. I mean, you look at people's incomes, disposable incomes, it's just crazy to exclude the things that are most important for actually sustaining their lives, the ongoing, regular, recurring expenses they have to expend just to function in society. And yeah, the inflation gauges are a mess, Jim. It's just it's a travesty.
Do you think it's time for governments to start giving us honest stats again so that companies and people can plan accordingly?
Honesty is always the best policy. Honesty is not the easiest thing to do, but I think most people agree in interpersonal interactions, it's best to be honest with people. Tell them the hard truth up front. Tell them what's going on. Then deal with the situation honestly. If you're dishonest, you can't solve problems. You can't make adjustments. You can't set the right course, whether it's for a family, a city, a nation, a company, whatever. And so, absolutely, I think there should be honest numbers. I think they're really dishonest, and it's really, really frustrating. If the American people were told inflation was 7%, I don't know what would happen. I think it'd just be, there might be a revolt. Would people demand that the Social Security, our pension system, the cost of living adjustments were 7% instead of 0%? Would they demand yields in treasuries that were 7 or 8% instead of 1%? Would they demand dividends in stocks that were 7 or 8% just to stay ahead of inflation? If people knew, if they were told that inflation was much higher than it really is, I think that the market consequences would be devastating. But still, honesty is the way it should be. We should have real hard stats and real data, and hope that would help us solve all our problems we have.
We'll have more with Adam Hamilton right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Adam Hamilton. Adam, what do you see happening with silver?
Silver is really interesting. It got off to a slow start this year in the new bull market, which is pretty typical. Silver usually lags gold. The speculators who buy silver, they tend to wait to see gold, to see if gold's in a sustainable new bull, to see if it's going to last before they buy silver. But once they do, silver catches up with a vengeance. Silver is a much smaller market than gold, so a given dollar of capital will go a lot farther in silver to push it higher. I don't have the exact number for you right now, but I think like in 2015, the global silver market based on demand per the Silver Institute was like 1/8 the size of the global gold market based on gold demand per the World Gold Council. So in that case, $1 buying silver would have 8 times the price impact of $1 buying gold because it's such a small market. We had that huge surge after the Brexit. It was I found it really surprising in late June. June and July are generally the summer doldrums for precious metals. They just grind sideways to lower. If you look at bull market years and just average the performance in Junes and Julys and bull market years, silver and gold both grind lower, silver more so than gold. But at the end of June, at the end of Q2, people started flooding into silver. The last couple of days, that fund window dressing I mentioned earlier, silver went up like 3%, 2.5%. In the first couple of days or few days in July, Q3, silver went up big on new fund buying. And so silver's hit new bull highs in the summer, which is really odd, but that just shows incredible strength, big investment demand underneath the scenes. I am kind of concerned, Jim, because speculators have also been buying intensely as well. I'm talking future speculators with extreme leverage. They can buy silver at 15, 20 times leverage in the futures market in the U.S. And if silver turns against them, these guys will have to sell fast. And the long contracts held by speculators in silver futures hit just crazy all-time record highs in recent weeks. And so there's definitely a big selling overhang, a record selling overhang hanging over silver. And so if something spooks those futures speculators and they're selling fast, silver is going to see a cascading sell-off. And, silver can sell off hard when it sells off. Nevertheless, we're in the seasonally strong period of the year. Silver tends to have big autumn rallies. Investment demand should kick in as gold rises, so that might mitigate some of the futures selling. Silver's been an incredible performer, and I I expect it to go much higher in the coming years, although the coming weeks could be iffy depending on how that future situation plays out.
Is silver a good bet then if somebody thinks the stock market's about to take another major dump in August?
Absolutely, without a doubt. The main reason that gold and silver suffered so much in 2014, 2015 is the Federal Reserve's third quantitative easing campaign levitated the U.S. stock markets. And when stock markets do nothing but rally, people don't care about alternative investments. Gold and silver are the leading alternative investments. They move counter to stock markets. So when stock markets are rallying, gold and silver demand tends to fall. If every stock you buy goes up, why worry about gold or silver? Why worry about alternative investments? Why not just buy conventional investments? But when the stock markets roll over decisively and start to sell off again, we'll see big gold and silver demand. People will be like, oh my gosh, I have all these stocks going down. If the market's dragging everything down, but gold and silver and the gold and silver miners are rallying, therefore I should add to my portfolio exposure. So gold and silver should be huge beneficiaries when the stock markets roll over. I think they're the best investment to have right now. Interestingly, some of the biggest, smartest investors in the world, billionaires like Bill Gross, the famous bond guy, Jeff Gundlach, another famous bond guy. These guys are worth multi-billions each, ran the biggest bond portfolios in the world. They're actually advocating gold and silver right now as well, just because the stock markets are so high and overvalued. And so there's a lot of big money that's ready to go into precious metals once the stock markets roll over. And so I think they have the best upside by far in this environment.
I'm always interested in billionaires. They have billions. Why do they need more? Why risk any of it?
That's an interesting question. I've never been a billionaire, and so I don't know how they think internally. I'm blessed to be a multimillionaire by the grace of God, and I've got plenty of cash that can last a long time, plenty of capital, but I love the markets. I want to do something with it. I think about the parable of the talents in the Bible where, the master gave his servants, X amount of money, and they were supposed to go out and do something with it. And the servant that just buried his talent, returned what the master gave him, he was stripped of even what he had and sent away, because it was bad. So I think that we're supposed to be good stewards over our capital in a zero-rate environment. Just sitting in cash, whether you're, a millionaire, billionaire, whether you just have $10,000, just seems silly because not only are you going to earn nothing, but you're going to lose that 7% a year, whatever the real inflation rate is. So why not invest? Why not try to better the future for your family, the charities you support, your community? So I can't imagine not investing, even if you had enough money. Occasionally, like a topic, it's okay to have an allocation in cash if you expect a bear market. If stock markets fall 50% and you keep cash, you can buy twice as many shares afterwards. But having cash as a long-term strategy because you're scared just seems like poor stewardship to me, Jim.
Plus, it's not fun.
Say again? Sorry.
I said, plus, it's just not fun to sit on it.
Oh, I'm in. Absolutely. Yeah. Speculation investment is so exciting. The markets are invigorating. Every day is new. Every day is different. And, watching cash languish in a bank account would just be horrible. I can't even imagine.
Well, take a look at Vancouver's Jimmy Pattison, one of the richest men in the world, in his office at 6:00 every morning. On Christmas Day, he goes to church with his family in the morning, and then afternoon he's back. Now, in the last few years, Jimmy, of course, being in an upper age bracket, has cut back, but he really does believe the whole thrill of it is the art of the deal, and maybe not the way that Donald Trump likes to do it by intimidating people down to the last penny. But certainly Mr. Pattison hasn't made his billions because he was easy on people. Yeah,
I think about passion. Like, if you're fortunate enough to be in some work that you're passionate about, you enjoy it, you want to do it, it doesn't seem like a burden. It seems kind of like a blessing, something exciting, something to look forward to. Obviously, there has to be a work-life balance, but I've talked with hundreds, if not thousands, of people at the markets over the years, and everybody's excited about them. Regardless of what their normal profession is, they're excited about investing, they're excited about growing their capital, they're excited about learning about companies they're interested in and investing in them and seeing their wealth multiplied, having their money work for them rather than them working for their money. And so I think the markets are just exciting inherently, like you said. And so, people investing, it also gives you a broader worldview. There's so many things that affect the markets, whether it's governments or news or corporate developments, central bank policy, valuations. It's neat to kind of watch the markets because there's so much that filters into your worldview when you're watching the markets. You learn so much about so many things. I've been doing this full time I'm in my 17th year now, Jim, and every day I'm learning new things. Every single day I find something new I have to research. Like I just hear something on CNBC, I get an email from someone, I talk with you, and there's something new I have to research. And so every day I'm learning, and I think the markets just facilitate so much learning, which keeps our brain sharp. The markets they're awesome. They're really exciting, really neat thing.
Adam, thanks a lot for chatting with us.
Thanks so much for having me, Jim. Talk to you soon.
My guest has been Adam Hamilton, CEO of ZealLLC.com. You're listening to HowStreet.com radio. You can find us on Twitter at TalkDigitalNet or check out our popular YouTube channel, Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.